Hi everyone and welcome to a new video. In this video I'm going to share with you a dividend stock that is down 26.7% since last year. I recently added this stock to my watchlist because it caught my attention. But before that I want to clarify that I am not a financial advisor and this is not investment advice, of course. The stock I'm talking about is none other than QUALCOMM Incorporated, ticker symbol QCOM. QUALCOMM Incorporated engages in the development and commercialization of foundational technologies for the wireless industry worldwide. It operates through three segments: Qualcomm DMA Technologies (QCT), Qualcomm Technology Licensing (QTL), and Qualcomm Strategic Initiatives (QSI). The QCT segment develops and supplies integrated circuits and system software with advanced connectivity and high performance, and low power computing technologies for use in mobile devices, automotive systems for connectivity, digital cockpit, and ADAS/AD and IoT, including consumer electronic devices, industrial devices, and edge networking products. The QTL segment grants licenses or provides rights to use portion of its intellectual property portfolio, which include various patent rights useful in the manufacture and sale of wireless products, comprising products implementing CDMA 2000, WCDMA, LTE, and/or off-DMA based 5G products. The QSI segment invests in early-stage companies in various industries, including 5G, artificial intelligence, automotive, consumer, enterprise, cloud, IoT, extended reality, investments, including non-marketable equity securities, and to a lesser extent, marketable equity securities and convertible debt instruments. It also provides development and other services and sells related products to the United States government agencies and their contractors. The company was incorporated in 1985 and is headquartered in San Diego, California. QCOM has a market cap of $140.23 billion, so we are talking about a massive company. Their current P/E ratio is 13.75, which is very good for their sector and better than most of their competitors. Their forward P/E ratio is even better. It is 10.89. This means that they are expecting their earnings to grow. This is a great sign, of course. I forgot to mention that their industry is semiconductors and that they belong in the technology sector. Looking into their financials and into their income statement specifically, it is obvious that the revenue is growing, most of the time at least, and that they are heading at the right direction. Their basic and diluted shares outstanding are almost the same since 2023. They slightly diluted their shareholders, I guess, but these are minor changes. They aren't really focused on buying back shares. Their basic and diluted earnings per share are growing extremely fast. 2023 was a bad year, but they're recovering pretty fast. Their current basic EPS are 9.47, while their diluted EPS are 9.33. In the last 2 years, their EPS grew by double digits. Their dividend growth is also good. They are growing their dividends consistently, which is great. Dividend investors love this consistency. Now, let's see their balance sheet. Their current cash and equivalents are just over $8.71 billion, while their short-term investments are just over $5.59 billion approximately. So, in total, their cash and short-term investments are $14.3 billion. Not bad. This is a solid cash position. They can use this money to invest back to their business so they can continue growing in the future. Or they can use this money to pay off their debt. Their total debt is $14.57 billion. This is not concerning at all. They can pay it off very fast if they want to. Another good thing is that slowly their debt is becoming smaller. As for their net cash debt, it is minus $272 million, so I wouldn't worry about their debt, but I will keep an eye on it, of course. As for their dividend yield, it is 2.67%, which is a respectable dividend yield. For every single QCOM share you own, you will get paid $3.40 annually, so 85 cents every single quarter. Not too shabby. They might not have a huge dividend yield, but they have managed to consistently raise their dividends for 10 years. The recurrent dividend growth is 6.25%. If they continue growing their dividend as fast, your yield on cost will become higher pretty fast. Their current payout ratio is 36.43%. They can easily afford their current dividend, while having at the same time a lot of room to continue raising their dividend in the future. As for their buyback yield, it is minus 0.33%, which means that they slightly dilute their shareholders, but this is nothing serious. This makes the shareholder yield 2.34%. Analyst consensus for QCOM stock is buy. This means that analysts are positive about QCOM share price performance during the next 12 months. They gave it a low estimate of $160, an average estimate of $203.96, a median estimate of $200, and a high estimate of $270. Personally, I really like their current valuation, but I don't have enough cash right now. Everything is down right now after the tariffs announcement, and I literally have only $40 to invest. The platform I use doesn't offer fractional shares, so I can't do much right now. My target is $120, so I can have something to aim for. These days, I understood the importance of having a solid cash position. There are many stocks I believe in, but without cash, I can't invest in any of them. Let me know in the comments below what is your opinion about QCOM stock. Do you maybe already own it? And also, let me know how is your investing journey going so far. Subscribe and turn the notifications on so you can see more videos like this one. Thanks for watching and have a nice day.